Alrighty. Good afternoon, everyone, and thank you for joining us today for the CIPS New England Chapter's February webinar, Building Procurement Strategies for the Decade Ahead, presented by Bill Michels. My name is Mandy Wong, and I'm with CIPS. I'll be the moderator this afternoon. If you have any questions during the webinar today, please use the Q&A feature on the bottom center of your screen, and Bill will answer and comment on your questions as we go through his presentation. After Bill's presentation, we will also hear a brief remark from Phil Broughton, Head of Business Programs, the Americas of the Chartered Institute of Procurement and Supply. At the conclusion of today's event, there will be a short 2-question post-webinar survey for you to complete as a pop-up screen as you exit out of the Zoom. Let me introduce Bill, if you have not heard of him before. Bill Michels is the VP of Operations in the Americas for the Chartered Institute of Procurement and Supply. A recognized expert in the sourcing and supply chain management industry, he has experience in a wide spectrum of industries and counties. Most recently, Bill was the CEO and founder of Airpart Consulting after more than 23 years at ADR North America. Under his leadership, ADR North America became a leading niche specialty consulting firm and has won several recognitions and awards. Bill is a sought-after speaker and writer with many publications, including co-authorship of the book Transform Your Supply Chain and numerous published articles. He is now working on a new book focused on supplier relationship management. Bill has a Bachelor of Science in Business Administration from Rochester Institute of Technology and an MBA from the Baldwin Wallace University. He's a CIPS Fellow and has the CPSM and CPM certifications. In addition, he's also on the board of directors for the Joe Nico Foundation, editorial board of advisors for Supply and Demand Chain Executive Magazine, and the advisory board of Palm Bridge. And now, without further ado, I will turn things over to Bill.
Thank you, Mandy. Boy, that was quite an introduction. Good afternoon, everybody, and good evening to you, Phil. What I wanted to do is I wanted to put together a list of the trends that are really going to disrupt purchasing and supply management over the next decade or so. I've talked to a number of CPOs and CEOs, and I think procurement as you know it will change radically. And I think that we need to be able to look at what are those changes and how do they impact our life, and what do we have to do to actually survive these changes. So I've identified 10 megatrends that we'll talk about. They really are the impact of automation and artificial intelligence. A lot of people are talking about robotic process automation and artificial intelligence. I'll kind of delve into what I know about it and what I've seen and how that's going to impact us. Now, after each one of these megatrends, I put down some strategic intent or some strategic direction that may help you think about how you should fit into these trends and what you should be looking to do. There's a continuing drive for total cost of ownership, and there's a change in the way that we're looking at price and cost reductions. We're going to look at what's going to happen in the future is value is going to be being prioritized over price. And I'll give you some real examples of how it's happening in the real world and what we're seeing and what the impact of that is. And then we're going to talk about architecting and aligning the supply chain, because as we get more automated, we're going to see more integration across supply chains, both in systems and in philosophy and in business alignment. And well, that brings us to, as we see this automation, the most important job of supplier relationships become the most important job of the procurement world. We're going to see a lot of changes in terms of the workforce and contingency workers. A drive for innovation and innovation transfer is going to be a critical thing that leads to revenue generation from the supply chain, which is a critical job of procurement. Realigning manufacturing, a little bit about risk management, a little bit about mapping the supply chain and why it's so important. We'll talk a little bit about corporate social responsibility. I put one slide in there on what happens post-COVID. But let's start with the trends and the opportunities that we're going to see, then they will change purchasing forever. What we know about purchasing will change. So artificial intelligence and automated processes will replace humans for routine transactions. So I've talked about this in a couple of webinars, and it was really interesting because a guy named Joe Ukora asked me if I wanted to see it in Stanford. They've got an AI computer that can search the world for suppliers, find the suppliers, generate an RFI, bring it back, look at it, generate an RFP, and make some recommendations. So we're starting to see that happening. And then we're starting to also see a lot of bot-to-bot transactions, which we can talk about. Now, when we start thinking about that, it really is an automation of the transactional process. And we'll talk about what happens to procurement. What happens to us is we're going to have to be more strategic in nature. That means we're going to have to find suppliers that align to our business plan. We're going to have to really integrate the supply chain and run the supply chain as a function. So I think that that's one of the things that's going to change in our lives. And then when we look at planning, demand planning, and inventory planning, you've got the Internet of Things. Now, I've got a truck that tells me when I need an oil change, and a refrigerator that tells me what I need to order. But when we look at the Internet of Things, as an end customer buys and sells a unit, then the demand will be transmitted automatically across the Internet of Things, and that's going to be real-time information, and it's going to be helping our manufacturing systems. So we're going to see changes in terms of the transactions, changes in terms of the planning, and we're starting to see bot-to-bot exchanges. So in some of the inventory, in some of the accounting systems, they're all over the place. They have bots that read emails, pull off the invoices, look at the suppliers, talk to one another, talk to the suppliers' bots, and we're starting to see more and more of that. And I think we're going to start to see more of that in terms of the pricing mechanisms as well, where bots have the ability to actually communicate and help us with pricing. If you want an example of bot-to-bot exchanges, look at the airline industry prior to COVID. When you wanted a ticket and everybody was looking at the prices, all the prices across the airlines would change at the same simultaneously, because all the bots are reading the pricing of their competitors all the time. And so it wind up commonizing some pricing. And I think the other thing is data management and analytics will drive the supply chain. We're going to be moving to analytics. So what do we do as a strategy for this? Well, the first thing is I had as a webinar earlier in the week with Rob Hanfield, and we were looking at the study done by North Carolina State, which says that the majority of companies have data that's not clean. You can't really analyze the data because it's not clean data. We're still running companies off of spreadsheets. We don't really have the item codes coordinated, and there's multiple computer systems in many companies. So I think the first thing that in supply management we have to do is really get a handle on what is our spend, clean up the data in our systems, and make it so that we can bring in data scientists, which will be a part of our future. We want to really understand the capabilities of AI, blockchain, and RPA. And I look at these things and I say, yeah, they're out there, but they're starting to come into play. I saw an article yesterday where Tesla is going to accept cytocurrency for its products. And so we're really starting to see a lot of changes in terms of AI, IoT, blockchain, and RPA. And it would be helpful if you really would look at that and understand it as part of the strategy. You need to develop a strong supplier relationship management program and consider how you're going to integrate those suppliers, and consider how you're going to align those suppliers to your business plan. I think you need to help your management understand that, one of the discussions that I've had recently is the legacy ERP systems are really going to become databases that hold the data. And we're going to have all these bolt-on cloud-based systems that are going to help us drive a lot of our needs. But management still is trying to justify systems with headcount, and they're not recognizing that if they don't fix their systems, they're going to be at competitive disadvantage. So I think that that's an education that will have to happen in the management side. And I guess you have to start learning all you can about robotics, RPA, how far is this automation away from you? Because I think it's not very far. I think you're looking at probably this decade when you'll start to see these systems come into play. So the second strategy, or the second megatrend, is that the people are starting to prioritize value over price. So many organizations, while there'll always be a need to get cost reductions and cost improvement, I think there's going to be some science behind, the decisions that you make on value versus cost. So I can give you two quick case studies. One of the case studies has to do with, I've worked in the glass industry for a while, and they have refractories around the ovens that melt the sand into glass. And every 3 years, you have to rebuild that thing. And it's probably a $15–20 million downtime when you rebuild those refractories. And I guess the category manager that I was working with, he had to make one of a couple decisions. Do I go for a cost reduction and take some money out of the refractory brick? Or do I spend a few more cents and get a refractory brick that lasts a year longer so I don't have a $20 million downtime, delay a $20 million downtime? So I think you have to think about, what is the value that you're getting? Should I get more value from our product, or should I get a cost reduction? And that becomes a business decision. And I'm working in the home building industry. And one thing I can tell you about home building is we don't have a lot of people going into the trades. We got a lot of people exiting the trades. So you would think they'd want to save a lot of money, and they do. They want to save money, but more importantly, they want to find the right suppliers and the crews that can go through their communities, finish up the homes, and get a return on investment for the land investment. So, those are the things that, we're starting to look at is how do we prioritize price over value? And I think in the long term, we're going to see companies move to drive for more value than cost. TCO is going to be what we use to drive supplier performance, and the short-term cost reduction will probably significantly reduce. So I think you have to start looking at your key items and look at a total cost of ownership approach. If you can reduce complexity, streamline your processes, improve your supplier performance metrics, increase your product life, increase your warranty, and add value-added services, you're really going to be making a better decision than if you were just taking a few cents or dollars out of a spend. So you have to really start thinking about things in a total cost approach. The other thing that shocks people is we speak a funny language, and Phil Broughton's on the phone and he calls it procurage. And we go in and we talk about our RFPs and our RFIs and our auctions and all of this stuff, and management doesn't want to hear it. They just want to hear, what's it cost? What's the benefit? What's the risk? How does it add to the revenue growth? How does it add to the value of the business? And if you're not talking in those terms, risk, cost, risk, opportunity, then you're not really here. They're not hearing you. They're pushing you aside. So we're going to have to, as part of our strategy, change the language that we use when we talk to our senior management. And the most important thing is we're going to have to change our influencing skills, or our soft skills. We got to be really good at influence internally, influencing externally, collaborating. Because if you can think about an integrated supply chain, you're an integral part of making that supply chain work. And then we have to look at really what's the value cost and the opportunity for value cost. So that's a change that I think we're going to see. Now, when you think about the supply chain and integrating the supply chain, supplier selection is the most important job a category manager or a procurement leader or a procurement practitioner has. Because when you're picking a supplier, you're picking the supply chain behind that supplier. And suppliers really have to be, the supply chains have to be aligned to your business strategy. We'll see linked, tied, competing supply chains as we approach the future. And an example of that might be the automotive industry, where you have a US domestic supply chain, a Japanese supply chain, a Korean supply chain, and a European supply chain. And they're all competing in some of the businesses for the automotive side. So those are just some examples, but that's a really important job. And we have to identify how many tiers do we have in the supplier, in the supply chain. Are they all adding value? Are any tiers not adding value? What's the risk and capability of the suppliers? What's a probability something might happen, and what would be the impact if it did? We ought to have a risk plan across the supply chain. We need to automate the accounts payable and order function, which we're going to do. We need to build integration wherever possible and audit our supply chain. As we move forward, I said supplier relationships are going to be really, really important. We're going to have supply transparency across the supply chain, payment for value contribution. It won't necessarily be payment for product, but it'll be what value do you contribute to the supply chain. We're going to have to link our values as a organization with our suppliers' value. We're going to have to identify all that risk. We're going to have to drive innovation in from the supplier. So someone asked me today on a workshop I did, how do we get revenue in improvement from purchasing? And we do because we want innovation from the supply chain. We want new ideas, new processes, new equipment, new designs, new services, and we want those suppliers to bring that innovation in, and that innovation will eventually contribute to revenue growth for the company. And I think we'll be measured on revenue growth as we move forward. So we have to build strong, reliable relationships. We have to be reliable. We have to build trust, maintain our credibility, audit the supply chain all the way down and up the supply chain. And then we have to drive dual accountability and run for the longer term, not the short term. So I think when we change our view on supplier relationships and suppliers, that will be something that we need to start now and look at across the chain. Daniel Pink a while ago wrote a book, and in his book, he basically forecasts that we're going to have a lot of people that are contingent workers. They're not necessarily employees, they're independent contractors. And an example might be someone that really understands the steel industry is brought in to build a strategy for steel and execute the strategy of steel, and then leave the company and go find another company that's looking for a similar strategy. Specialty expertise will be used as and where it's needed. And we will have category management, commodity management done. As I said, someone will come in, look at it all, look at the marketplace, look at the suppliers, look at the location, look at the products, and then build some strategies, execute the strategies, and leave. So it provides expertise on a flexible basis. So for us, we have to upskill, and then we have to be willing to outsource to some of these experts. We have to understand procurement and really specialize in where we want to be an expert. And we have to be open to change, because that's all going to start to change. And that's things I see into the future. Innovation transfer, that's something that we're going to do. Companies will transfer innovation back and forth across the supply chain. Innovation will translate into revenue generation. And Mandy indicated I was thinking about a book, and the name of the book would be The Best Customers Get the Best Idea. One of the companies I know that works this way is McDonald's with sub-suppliers. It may take 3 suppliers. They would get guaranteed business in a certain percentage, and they'll share innovation across each other. And they always have that business. They're not going to get a lot more, but they definitely share innovation, and McDonald's is the benefactor of that. It actually leads to revenue generation. The most important and disruptive supply chains will achieve competitive advantage as we still innovate. So innovation's got to be a requirement for all suppliers. When you write a contract, it's got to be that they're going to bring you innovation. We're going to have an innovation meeting and fair with our employees and their employees. A good example of how that might work is a guy at Clive Heel was at Genentech. He went to his management and he said, let's do an innovation center where our employees work full-time with suppliers' employees for a year in a dedicated way, and they bring in innovation. And he had, almost $100 million in ideas and in implementable innovation in just 1 year with suppliers working together. So you want to engage suppliers. You want to get them to share ideas. you want to generate revenue from that on both sides, and you want to enhance the products you have. So there's an opportunity to be extracting innovation from the supply chain. We've had a lot of disaster. So realigning manufacturing is another trend that we have to look at. We've had natural disasters, we've had a pandemic, and we've also had tariff wars, which have really taught us some big lessons. And one of the things that's going on right now are many organizations are asking, is it wise to be producing our products one place on the earth where we're chasing low-cost labor? Is that the best thing we should be doing? They're also asking, should we have duplicate plants with smaller footprints close to the markets we serve? Or should we be really bringing stuff in? So I always hear about this inshoring part and how that's great and it's going to bring jobs back. But I can tell you of a recent company that brought back all of its appliance manufacturing. They spent $1.9 million to automate the factory, and those products are produced in an automated factory. We don't have people putting nuts and bolts in frames and motors on things. The robots do it, and the robots do it 24 hours a day. They don't get tired. They don't get sick. So I think that's interesting. There's a company in Japan called Funak, and what they have a factory, and it's been running for quite a while, where robots make other robots at the rate of 30 a day, and the factory runs unattended for 30 days. And so we do see that. And then the other thing is, from the pandemic and the natural disasters and everything, a lot of companies are questioning, is JIT still valid? Or should we be running a little bit of safety stock across different channels? So I think maybe it is. I think the recent disasters and the fragile supply chains that were breaking down in the pandemic may have proven that's an old concept. So we want to manage our PESTLE, which is the political, environmental, social, technical, legal, and economic sources in the supply chain. We want to develop lots of supply chain options for that strategy. We want to create options for duplicating, global sourcing, local sourcing, and reshoring. So we want to look at all those things, and we should be at the forefront of decisions about where should we be sourcing some of these materials. And the question, I guess, is, should we be chasing low-cost labor? The next low-cost area is going to be Africa, as China starts to develop a middle class and the costs start to rise. So automation is definitely a solution for a lot of these problems because they eliminate the need for low-cost sourcing. And then we want to develop a risk assessment on, if we do it from one place on the earth, what is the maximum risk we're going to see? So do we want to be the first in the next low-cost country, or do we want to actually diversify our strategies and go back to our management with clear strategy options for where we should be sourcing? And then risk management. So we're almost to the end of the megatrends. Risk management's really, really important now. The pandemic has made it critical. So it's a key role for procurement. One of the companies I worked with in the biotech industry, they had a spend of 250 million, generating a profit of 7 billion. And the management came in and said to the procurement, we never want the supply chain to shut down. So figure out what we have to do to never have this thing shut down. Don't care how much it costs or what we do. We want a mitigation strategy on everything, and where we need to dual source, we'll dual source, and where we need to buy inventory, we'll buy inventory. Of course, if you're spending 250 million, generating 7 billion, you can afford some shelf-stable inventory. Corporate social responsibility is really high on the risk channel. You can't have child labor, forced labor, bribery, or any of those things in your supply chain. You shouldn't have them. And then you can have a reputation risk or damage that you can never recover from. And then on the list of procurement should be cybersecurity. And in your contract should be cybersecurity and data protection. And a lot of us have old green evergreen contracts sitting there, and we need to renew them, make sure that we cover the risk of cybersecurity and reputation damage. Which brings me to strategy 8, which is we got to map the supply chain. You got to run continuous financial health checks, especially now coming out of COVID. The supply chain, some of them are broken, some of them are cash poor, and we need to be running financial checks on the supply chain. If we don't have a map of the supply chain, then we're at significant risk for our companies and ourselves. Then we got to measure probability versus impact, as I've said before, and you should develop a risk register for management. Every month you should be reporting what the key risks are, and so that the company's not exposed. At least if they're exposed, they're aware. So that's important. I can't say enough about mapping the supply chain, and I will say a couple things. I think that most companies look at their risk management program from a tier 1's perspective, and if you're running a corporate social responsibility program, you're guaranteeing that there's none of those issues in your supply chain. You're guaranteeing that you have ethical procurement. You're guaranteeing you don't have bribery. And you're also saying that you don't have forced labor in the supply chain. Many people have it in their annual report that they have compliance to CSR, they have audit trails, they're measuring performance, and they're managing risk. I can tell you, most are not. Most people don't have a map of their supply chain. In fact, I can tell you 95% of the clients I've ever worked with don't have a full map of the supply chain. And I think that that's dangerous. You can't comply to corporate social responsibility. You can't identify all the risks for your company. I was working with an integrated chip manufacturer. We did start the map, and we got 3 tiers down and found one supplier making component for everybody in the industry. So I think you really need to think about, do you have a map, and how are you going to do this, and to what level will you do it? If you have a policy out there endorsed by your board of directors that says you're doing it, then you better start doing it. That's all I can say about that. And then I think we have to pay attention to corporate social responsibility, which are the political, economic, social, technological, and legal opportunities in the marketplace that can get you. I put one slide in just for fun on COVID-19 and what's going to happen when we get back. I think that a lot of our supply chains are financially stressed. If you have a cafeteria service, I'm sure it's financially stressed. People have stopped making a lot of food service products. Cash is king. If you're going to go out there with your cash demands and say that you're going to have 120, 180-day terms, as some companies have done, you're going to be in trouble if someone else comes along and they're willing to pay their bill. I also think that capacity is going to be diminished because there's social distancing in some of the factories, which are reducing capacity. So if they only have so much to supply and they have someone willing to pay them, and the best customers get the best service, then you might be out if you keep your long terms. And I think you have to review your cash terms coming away. Cost containment, if you're not getting hit with price increase letters right now, I'd be really surprised, because everybody I know is getting them, and they're getting them because people are suffering on the margin line, and they're just trying to recoup their margins back. And we're still remote, and there's lots and lots of opportunities for productivity. In fact, some of the remote training we do, I had a client come back to me and say, hey, it was great that we saved money on travel. It was great that we saved money on meals. It was great that we didn't have to pay you travel fees. He said, but that wasn't the biggest benefit of remote learning. The biggest benefit was I saved 2 days per person on the travel. So he had 25 people in the class. I gained 50 days of productivity. I hadn't looked at it like that. Strategies, you got to monitor the supply chain for health. You got to look at the payment terms, as I've said. Create proactive cost containment strategies right now, because you're starting to see these things coming. And as soon as it gets back to some kind of normal, we're going to see more of them. Think about the best customer concept, be a customer of choice, and build a mix of remote, in-person, and remote meetings, because I think they're going to stay for a long time. And with that, I'll turn it over to Phil.
Thank you, Bill. That was excellent as ever. Some really, really, really strong insights into some of the challenges that the profession is facing and will continue to face for some time. So thanks everybody for attending tonight. For those of you who don't know, CIPS is the Global Professional Institute supporting organisations and procurement and supply management professionals around the world. We promote good practice, the benefits of good practice to business and society, and enable individuals to have long and successful careers. CIPS is represented around the world with main offices in Australia and New Zealand, in the Middle East, in Dubai, in East and South Africa, and right across Europe. And here we are represented with our office in Chicago, and members are supported with a network of chapters, most notably tonight in New England here. If you're not already a member of CIPS, we'd like to encourage you to join and be part of our community. Our commitment to members is to supply relevant and powerful and valuable knowledge to encourage networking, not just locally, but globally, peer-to-peer, with fellow professionals around the world, sharing best practice, ideas and innovation, addressing some of the challenges that Bill's talked about tonight. Here in New England, our board of directors running the chapter is developing a fantastic series of events for 2021, which will encourage a transfer of knowledge. We've got some terrific speakers lined up from functions and professions that will encourage and support the very, very best practice. Some people who will share insights into some of the issues that Bill's highlighted. And we'll be supplying the opportunity to network, as I say, locally, but also introducing some of our offices and communities from overseas as well, to encourage that peer-to-peer sharing of ideas and thinking, and hopefully building some long-lasting friendships. There are some massive challenges coming up. Not noticed when Bill's talked a lot tonight about COVID-19. I think we're all aware personally as well as professionally some of the issues and some of the challenges and some of the pressures that the pandemic is bringing. There's geopolitical issues around the world that are creating uncertainty. And there's also economic issues which will make life tough for a lot of businesses and probably a lot of us as individuals. In situations like this, we all know that it is procurement and supply management's time to shine. The issues and pressures within business quite often turn to supply chain to deliver solutions, to come up with innovation, to drive efficiency and to drive economies and to save money. So right now is a great time to be saying to you that should you join CIPS, we will promise to give you the very, very best support that we can to enable you to deliver value back to your business, but also to develop your career as an individual and a procurement supply management professional. So once again, thank you so much for attending tonight. We hope to see you again at an event soon. And please follow the instructions on the slide, which will appear on your screen quite shortly, to check out how to join CIPS and some of the things that we've got coming up. So there we go. There's the slide I was hoping for. There's some web addresses on there, some contact details. Please reach out to us. If you've got any questions, ask me or Bill or any of our team. We'll be delighted to support you and to welcome you to an event soon. Thank you very much indeed.
Mandy, I don't see any questions. I don't see any questions in the question box. What we tried to do is try to give people a future look at where things are going, and now we may have a question.
Yeah, so Bill, we actually did have someone send in a question. Ken is wondering, Bill, do you think, in your opinion, that after COVID, many of our companies will keep the work from home, or the majority of the work days for the office workers, purchasing, and et cetera?
That's a great question. I think from the CEOs that I've talked to and what I've read is that some companies already decided that they're going to leave 50% or more of their employees working from home. I think that the technology like Zoom and other technologies has been improved so much that we're able to accomplish some things. I can tell you one thing I'm never going to do again. I'm never going to get on a plane to fly 2 hours for a 1 hour meeting. You know, it just doesn't make sense, but I wouldn't have thought anything about it last February. I would have just hopped on the plane, been there, did the call, worked together, collaborated, and now it's so easy to do with some of the technology. You have Zoom, Teams, Adobe Connect, all kinds of things. So I do believe that that's going to be a lot of people are going to be working from home for quite a while. In fact, our offices, Mandy, are closed until June, right now, and maybe beyond, and so we don't know. But it's been easy. I think what we're going to see, though, as a result of that, is if you're in commercial real estate, you got a problem. I think there's going to be a lot of commercial real estate around.
We have a couple more questions coming in now. George is asking, do you have a rough estimate of what percentage of the domestic supply base you think will disappear due to the financial stress?
I don't know, but I know that we haven't really done a lot of companies have not done a full assessment into their supply chain. So some of the supply chains are hurt. The food supply chain, I know, is hurt. Some of them are doing very well, though, which is really interesting. So if you look at the RV industry is booming because people are using that for social distancing and traveling. The home building industry is booming because people realize they're going to stay at home. And so they're actually building houses in the place they want to be with offices and other things. So some industries are doing very, very well, and other industries are not doing so well. So I think it really depends on the industry you're looking at. If you start to, you need to start to map and see if everybody's intact. You'll know it if you start missing deliveries, and if things are slow, and if people are demanding cash, you'll start to see some of those breakdowns.
I think one of the things that's already happening is that some of the supply base is diversifying. Suppliers are changing tack to support probably sectors that hadn't supported before, or look to new products, new services, new customers. So I think there's going to be an awful lot of disruption, an awful lot of volatility, an awful lot of innovation and creativity as businesses work out where their future lies.
Yep. So there's a lot of uncertainty, and that's where you really need to start doing the risk assessment.
Mm.
All right. Another question for Bill. Todd is wondering, for supply chain mapping, what is the very first step a company should be taking to begin the process?
That's a good question. For most companies are just mapping their tier 1 suppliers. So they're looking at their first tier, and that's great. But beyond that tier, there's risk down the supply chain. So you need to be working with your primary tier 1 suppliers to identify all the suppliers in the supply chain. And suppliers are sometimes reluctant to give us information about who their suppliers are, but as part of your commitment to corporate social responsibility, bribery, and the things that you're committing to in your annual report, it's just as important for them to go down that supply chain as it is for you. And I think that they're worried that you're going to put together capabilities to do it yourself. But at the end of the day, you got to start with your tier 1 suppliers, and you got to start working down the supply chain from your key tier 1 suppliers. You have to decide the ones that are the most important are the ones that are going to cause you the most risk. So where you have the worst risk that you have is where you're single source and there's only one location producing it somewhere in the world. That's an automatic. You got a problem. And then start with those suppliers and start looking backwards in terms with working with them to commit to your corporate social responsibility opportunity and your environment opportunity, and just for risk management. So when I told you about that one company that did the risk assessment, they were given there was a complete risk RFI delivered for them, and they had to fill out the RFI. Only 2 companies didn't fill out the RFI, and they didn't because they were worried about exposing their risk to the client company, and they were immediately sourced out because they were such a risk. It may have taken, but it was pharmaceutical, so it takes 2 years to get something through the FDA. So it probably took 3 to 5 years to get them sourced out. But if they exposed that kind of risk and they didn't want to share it, then they went away.
All right, Bill, another question from Reggie. What SRM systems are currently used?
What was that again? I didn't hear that, Mandy.
What SRM systems are currently used?
All right, that's a good question. I don't know of a really good one. I think you really have to start mapping your supply chain, working with the suppliers, getting them aligned, look at your process and see if your process is effective. Your process is going to have to be aligning your suppliers with your corporate goals and really kind of getting some transparency across the supply chain. I don't know that any have done it yet. In fact, Phil and I were talking today about a client that's asking for some work in SRM, and the way we're going to do it is we're going to identify the process, make the process, codify the process so it's good. Then we're going to train people within the organization on SRM. Then we're going to train the suppliers, and then we're going to try and get things together. But one of the things you can do is if you use some kind of segmentation matrix like portfolio analysis and CrowdJIC, which it's a couple names, you can look at that matrix. And then there's another one that you can look up called supplier preferencing. So CrowdJIC looks at how we look at suppliers, and the supplier preferencing looks at how suppliers look at us. And so we want to look at the two of them together to see where there's a good fit. So if you have a supplier that thinks you're a nuisance and you think they're a strategic supplier, you got a problem, and you're going to have to, either change the relationship or change the supplier. Or if you've got a supplier that thinks you're the core, the best, and they're strategic, that's going to be ideal. So I think you need to, or if you're treating them like leverage and they're treating you like core, that's not a fit. So you have to really take those two matrices as a good start and look at how do you fit with your suppliers? How do we look at them? How do they look at us? And is it a fit?
Great. And then this may be a better question for Phil to answer. Someone is asking, if they're already ISM certified, how difficult will the process be to get certified with CIPS?
Oh, right. Yes. No, it's not difficult. It's fairly straightforward. There is a pathway. Obviously, there's a couple of hurdles to overcome, but please reach out to us. Mandy actually will probably be the best person to reach out to ask that question, or send your details to usainfo@cips.org, and we'll be in touch with you. We'll explain the pathway. There is an established pathway.
Thank you, Phil. And then Ken also raised a good point about the presentations for today. So all of our presentations are recorded and they will be posted onto the CIPS YouTube channel. And then once those are loaded up onto the CIPS YouTube, these recordings will be available on the CIPS New England Chapter website, as well as the CIPS USA website as well.
Well, Mandy, I don't think we want to keep people much longer, so let's sign off and say good night and thank everybody for coming. And we'll have another one very short next month for New England.
All right. Thanks again for everyone for joining. For any questions, you can reach out to any of our CIPS members. You can also reach out to usainfo@cips.org, and we will get in touch with you. All right. Have a good evening, everyone.